In 1602, a group of merchants in Amsterdam handed over their money for something that had never quite existed before. Not a loan, not a share of cargo on a single voyage, a piece of paper that promised them a sliver of a company that would outlive every one of them, that they could sell to a complete stranger without the company ever needing to know or approve, and that would trade hands in a courtyard so chaotic that people would eventually start placing side bets on things that had nothing to do with trade at all. Nobody involved that year had a word for what they were actually creating. They just knew it solved a problem that had been quietly ruining merchants for decades. Some of those investors got fabulously rich. A few of them, within a decade, would try to destroy the whole system from the inside, and nearly succeed. This is the story of how a single sheet of paper became the ancestor of every stock certificate, every ticker symbol, and every market crash that followed. To understand why this piece of paper had to be invented, you need to understand how insane long-distance trade was before it existed. A merchant funding a voyage to the East Indies for spices was making a bet that could take 2 years to resolve, across a route where storms, disease, piracy, and simple bad navigation regularly sent entire ships, crews, and fortunes to the bottom of the ocean. Mortality among the sailors who actually made these voyages was brutal even when a ship returned safely, with disease alone killing a significant share of any given crew before the round trip was complete. The prevailing solution in the Dutch Republic was the Reederij, a temporary partnership formed for exactly one voyage. Investors pooled money, the ship sailed, and when it either returned loaded with spices or didn't return at all, the partnership dissolved and everyone settled up. It worked in the sense that trade happened, but it meant every single voyage was its own isolated gamble, with its own paperwork, its own investors, and its own total exposure to a single roll of the dice. There was no way to spread that risk across time, and no way to stay invested in the trade itself rather than in one specific, terrifying journey. Making matters worse, by the late 1590s, several different Dutch trading companies, with names like the Compagnie van Veere, the long-distance company, were competing directly against each other for the exact same East Indies spice trade. Rather than combining forces against their real competition, the well-established Portuguese trading empire, these Dutch companies drove up the price of ships and supplies in the Indies by bidding against one another, then flooded the Amsterdam spice market with competing cargo when they returned, crushing each other's profits. It was, by most contemporary accounts, a spectacularly self-defeating way to run a national trade strategy. The negotiations to merge these rival companies dragged on for months, with individual company directors reluctant to give up their own regional advantages for the sake of a larger, shared enterprise none of them would fully control. Someone with real political authority was going to have to force these rivals into the same room, whether they liked each other or not. That someone was a Dutch statesman named Johan van Oldenbarnevelt, who in 1602 pushed through a merger, combining the competing companies into a single entity, the United East India Company, universally known by its Dutch initials VOC. The States General granted it a 21-year monopoly on Dutch trade east of the Cape of Good Hope, along with genuinely extraordinary powers for a private company. The right to negotiate treaties, maintain its own soldiers, and build fortified trading posts wherever it operated. On paper, this was simply a bigger, better organized trading company. The company's founding capital reportedly reached somewhere around 6.5 million guilders, an almost incomprehensible sum for the period, dwarfing anything a single Reederei partnership could ever have raised. In practice, the mechanism the VOC's founders used to raise their initial capital was about to matter far more than the merger itself. Earlier Reederei partnerships had one built-in escape hatch. When the voyage ended, investors got their capital back along with their profit and could walk away entirely. The VOC's charter did something investors had never really agreed to before. Capital was locked in for the full 21 years, with no right to withdraw it from the company directly. For a merchant who suddenly needed cash, this should have been a deal-breaker. Instead, the VOC allowed something almost as an afterthought that turned out to be the actual invention buried inside this whole arrangement. If you needed your money back, you didn't withdraw it from the company. You sold your claim to somebody else. That claim, that transferable slip of paper representing a piece of ownership, is essentially the first modern share of stock. A shopkeeper who bought in during the initial 1602 subscription and then needed money 3 years later for an entirely unrelated emergency didn't have to beg the VOC's directors for an exception. He simply found another Amsterdam resident willing to buy that claim off him at whatever price the two of them agreed on, and walked away with cash while the VOC's actual capital never moved an inch. And a tradable asset, once it exists, has an obvious next requirement: a place to actually trade it. For the first several years, VOC shares changed hands informally, in taverns, on bridges, wherever buyers and sellers happened to find each other. By 1611, that informal chaos had outgrown its space, and the city built the Amsterdam Bourse, designed by the architect Hendrik de Keyser, and widely considered the world's first purpose-built stock exchange. A dedicated courtyard where trading in VOC shares, and increasingly other financial instruments alongside them, could happen in one predictable location at scheduled hours, announced each day by the ringing of a bell. A building built specifically to host the buying and selling of ownership itself was, at the time, a genuinely novel piece of civic infrastructure. And within a few years, the same courtyard was hosting trade in government bonds, commodity futures, and insurance contracts alongside VOC shares, quietly becoming something closer to a general financial marketplace than anyone had originally planned. What happened inside those walls over the following decades would make the building's original purpose look almost quaint by comparison. Share prices at the Bourse moved on exactly the information you'd expect: rumors of a returning fleet, news of a naval battle, word of a spice shortage or surplus. But they also moved on considerably less predictable inputs. According to Joseph de la Vega, a trader who wrote one of the earliest first-hand accounts of the Amsterdam market in his 1688 book, Confusion of Confusions, the atmosphere inside the Bourse was so charged with speculation that traders reportedly placed side wagers on almost anything, including, according to his account, other people's health and life expectancy. Traders reportedly clustered around specific pillars within the courtyard associated with particular types of business. A kind of informal zoning that let a newcomer figure out where the real action was happening simply by watching where the crowd was thickest. Whether every detail of his colorful description was literally accurate or slightly exaggerated for effect, historians still debate. But the broader picture, a trading floor that had become genuinely addicted to speculation for its own sake, is well supported. There's also a persistent bit of market folklore worth mentioning here, though it should be filed under legend rather than fact. The terms bull and bear, still used for optimistic and pessimistic markets today, are sometimes traced to an old proverb about selling a bearskin before you've actually caught the bear, a reference to speculators selling shares they didn't yet own. The etymology is genuinely disputed by linguists, but the phrase has stuck around for centuries regardless of where it truly began. None of this speculative energy would have reached the scale it did, though, without the sheer size of the company everyone was gambling on. By many modern estimates, accounting for inflation and scale, the VOC eventually became one of the most valuable companies that has ever existed, dwarfing the market value of most companies trading today. Across its 2 centuries of operation, historians estimate the company sent out nearly 5,000 ships and employed roughly 1 million people in total, a scale of enterprise essentially without precedent anywhere in the world at the time. It employed tens of thousands of people at any given moment, maintained a private fleet and army larger than many actual nations of the period, minted its own coinage in some of its territories, and could unilaterally wage war or negotiate treaties with local rulers across Asia without needing permission from the Dutch government back home. The company governed its Asian operations from a fortified headquarters city called Batavia, founded in 1619 on the site of present-day Jakarta, administered by a governor-general who effectively ran an overseas territory the size of a small empire on the company's behalf, reporting back to Amsterdam only every several months as ships came and went. Historians frequently describe it as the first true multinational corporation, and depending on how loosely you define the term, arguably the first corporation whose economic footprint rivaled that of a sovereign state. An institution with that much money moving through it was never going to stay a plaything of wealthy merchants alone. Unlike many earlier trading ventures that were restricted to a narrow circle of elite investors, VOC shares were sold to a genuinely broad cross-section of Amsterdam society at the company's founding, including artisans, shopkeepers, and members of the middle class who had never before had access to this kind of investment. The company's founding subscription book was, remarkably, open to essentially any resident willing to walk in and register, for a period of several months, at offices set up in multiple Dutch cities at once. This wasn't philanthropy, it simply raised more capital faster. But it had a side effect nobody had fully planned for, a real, if imperfect, popular investing culture, with ordinary households suddenly holding a financial stake in the fortunes of ships sailing on the other side of the planet. Widespread ownership is generally good for raising capital. It is considerably less good for maintaining orderly, unemotional markets, a lesson one particular investor was about to teach the entire system the hard way. In 1609, a disgruntled former VOC director named Isaac Lemaire, locked in a bitter dispute with the company's leadership, organized what's often described as history's first coordinated short-selling operation, working through a secretive group of associates later nicknamed the Great Bear Cartel, essentially a group agreement to sell VOC shares they didn't actually own, betting the price would fall, with plans to buy them back cheaper later and pocket the difference. It was clever, aggressive, and deeply alarming to VOC's directors, who saw it as a direct attack on confidence in their own stock. Lemaire himself was eventually forced to flee Amsterdam over the scheme and his other disputes with the company, never fully recovering his fortune. Dutch authorities responded by banning short-selling entirely, one of the very first securities regulations in recorded history, aimed specifically at protecting a company from its own shareholders turning against it. The ban would be revised and reintroduced repeatedly over the following century, a pattern regulators chasing speculative behavior would repeat again and again in markets far beyond Amsterdam for centuries afterward. The VOC's decline, when it finally came, wasn't a single dramatic crash, but a slow financial hemorrhage stretched across most of the 18th century. Rising corruption among company officials stationed in Asia, expensive and repeated military conflicts, including the costly Anglo-Dutch naval wars of the 18th century, most devastatingly the Fourth Anglo-Dutch War of 1780 to 1784, which crippled VOC shipping and trade routes for years afterward, growing competition from British trading interests, and a persistent habit of paying out generous dividends even in years when the company wasn't actually profitable, all combined to quietly hollow out an institution that looked, from the outside, like it was still an unshakable giant. By the 1790s, the Dutch state had already effectively taken over financial oversight of the crumbling company, propping it up with government loans, while a special committee tried, and largely failed, to reverse decades of accumulated debt. By the late 1790s, the VOC was functionally insolvent, kept alive on paper for years by directors who continued approving dividend payments to shareholders that the underlying business could no longer actually support, a decision that flattered the share price in the short term while quietly digging the company's grave. In 1799, the Dutch government formally dissolved the company, absorbing its remaining assets and debts directly onto the national ledger. The single most valuable company in the history of the world at that point had quietly ceased to exist. What outlived the VOC completely was the mechanism it had accidentally perfected: transferable ownership, traded in a dedicated public marketplace, priced continuously by whoever showed up that day. Every stock exchange operating today, from New York, founded under a buttonwood tree in 1792, to London, to Tokyo, still runs on that same basic architecture, a claim to ownership that exists independently of the company's own books, changing hands between strangers who never have to ask permission. The Amsterdam Bourse also left behind something less flattering, but arguably just as influential: proof that the moment you let ordinary people trade a piece of paper for profit, Some of them will eventually stop caring what that paper actually represents. Within a few decades of the VOC's shares first hitting that courtyard, that exact impulse would attach itself to something considerably stranger than a shipping company: a flower. Every instrument has a story. This was the fourth one.